European Union leaders still agreed to impose an oil embargo on Russia, albeit partial. The ban covers more than two-thirds of oil imports from the country. However, the European Commission delayed restrictions on imports from a key pipeline, which account for about a third of Russia's exports to Europe. At the same time, the European Union's plan to replace Russian oil is still unclear. Reportedly, the crude oil embargo will take effect within 6 months, but this period is not enough to boost renewable energy supply. This will take years, so it's not surprising that oil prices have reacted to the news with gains. However, its bullish run is limited by the lack of specific timelines regarding a Russian oil embargo, as well as expectations of Russia's retaliatory measures. Anyway, oil prices are trading upwards and will undoubtedly continue to rise. Now the question is how soon the asset will overcome the previous historical high posted back in 2008. Against this background, Brent crude oil futures have topped the level of $120 per barrel. At the moment, bullish sentiment is unusually high. This may lead to a subsequent increase in the volume of long positions. Thus, if the price consolidates above the 120 mark on the 4-hour chart, the way to $123.75, the local high posted on March 23, will open. Meanwhile, gold has not responded to the news that the European Union leaders reached a compromise to impose a partial embargo on Russian oil supplies. Apparently, investors have shifted their focus to the energy market, as the decision of the European Commission may well lead to the serious oil supply disruptions around the world. Given that oil is a strategic resource that contributes to economic opportunity and energy security for the global market, safe haven assets seem to have taken a back seat. However, it's a temporary phenomenon. Risks caused by the European Union's embargo on Russia are high and will most likely result in a higher demand for the yellow metal in the near future. According to the trading chart, the resistance area of $1,860 and $1,870 is still winding on buyer activity. As a result, the market has formed a sideways channel limited by the levels of $1,840 and $1,870. Thus, a movement within the current corridor of $30 may lead to a local burst of activity in the market. And in this case, the best tactic is to trade with a view to breaking through one or another boundary of the sideways range. Speaking of the ruble, the Russian currency remains fairly stable. Even before the official announcement of the European Commission's decision, the ruble posted rather solid gains amid expectations and rumors that began to spread just shortly before the statement by European Commission President Ursula von der Leyen. Oddly enough, the EU's decision on an oil embargo creates additional preconditions for the ruble's growth. Turmoil that may now arise will contribute to both a complete restructuring of oil supply chains and an increase in its value, and thus Russian companies will eventually deliver oil to other countries rather than to Europe. Their profit will only increase. Therefore, demand for the ruble will increase as well. In other words, the dollar may well fall below the mark of 60 rubles in the short term. That's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.